Hello and welcome to Beekeeper. I'm Hiral Dadia. One stock that is in focus is Anant Raj on the back of the blockbuster numbers that have been announced for the fourth quarter. Joining us is Mr. Amit Sarin, MD at Anant Raj. Amit, good afternoon and welcome to the show.
Good afternoon. Thank you.
And Amit, firstly, congratulations on the improved numbers that we've seen. A good growth that has come in on a year-on-year basis as well. And the margins have improved substantially. What has led to this kind of a number this quarter around?
See, here, as you can see, last year we had achieved a turnover of 500, which is actually double from what we had done the previous year. And this year we have crossed 1,000. To be exact, we've done 1,004. The main contributor is the residential sector, which the company has been working on, which is in Sector 63A. It's called Anant Raj Estates. And the main contributor was that on the 21st of July 2022, we launched a new product here called Ashok Estates, which is named after our founder chairman, Mr. Ashok Sarin. And that project is today the main contributor. And in this, it's pretty simple for the company because here we are simply selling plots. So the sale is faster, the money comes in much faster, and that is what is helping us achieve better turnovers as well as better profits also.
Right. So overall, from here on, what's the strategy going to be if you have to look at the coming years? Because clearly, from a real estate specific perspective, the trend that we are seeing is specifically in the luxury segment, right? You still have the mid-size and the affordable side, which is still picking up now. So what's that trend looking like?
Here, fortunately for us, right now our focus for the coming few years, at least 4 to 5 years, is all going to be in 63A. We have enough inventory here. And, this is going to keep the flag going high. The turnover is only going up. So the next 4 to 5 years, our prime focus is going to be Sector 63A with our prime focus on Anant Raj Estates and Ashok Estates. In fact, we are all set to do one more launch on our founder chairman's birthday on 21st of July 23. That's one. Other than this, our main focus since last year has been data centers. As you know, the company is in the trend of reducing its debt. And while reducing the debt, company has been always, with internal accruals, has been able to invest decent money into data centers. And today our 3 megawatts is now up and the servers are about to reach. So from this quarter, the data center income will also start to kick in. So going forward, our prime focus is going to be the luxury segment in Sector 63A, where we have good inventory still left with us, and the data centers.
Right. So when you talk about the data centers as well, what's the potential with regards to revenue generation?
See, I'll tell you, this started 2 years back when the Indian government seriously thought about, not letting Indian data go outside India, which is very right. All big countries and important countries in the world today don't let their data be stored in other countries. So our country is also thinking on the same lines. In fact, act to this effect was already made. Then it was little bit legalized because there's not enough infrastructure in our country, which is now getting built. And, we, along with a lot of other people, are also now focusing on it. So this is what gave birth to data centers. What we do is we have buildings which we give, where we have complete power backups, air conditionings, all the facilities up to the rack. So all the client needs to do is get his server, and we maintain the complete thing for him in terms of the cooling, the backups, and everything. So this is a new business which has now started. And at Anant Raj, I guess we are today sitting with ready buildings. We have 3 buildings, one in Manesar where we've already started, then in Rai, and then in Panchkula. The buildings are already there. The land is fully owned by the company, and all the required permissions are already with us. So this is one business where the company is going to unlock a huge value.
Okay. And overall, what's the milestone that we want to achieve from the data center business in the next 2 to 3 years?
As you know, we're reducing debt, number one. In spite of that, we have invested close to 140 crores in the last one and a half year in data center business. And today we've already started. So now going forward, we feel that, the Manesar project, as of now, we have all the permissions in place to go up to 21 megawatts. Okay. The total building is capable to go up to 50. The total, these 3 buildings put together can go up to 300, which is a big, big number. And today, we are investing from our internal sources. So for 21, we are completely sorted. And beyond 21, as and when we get the inflows from, we don't want to take on debt for doing this. Of course, we have now two people behind us. We have Apollo and we have SC Louis, who are now also, financing us. But we don't want the debt of the company to go up. So with internal accruals, we are sorted up to 21, which we'll do in the coming years. And beyond that, we will see how to go about.
Right. So overall, when you talk about, the debt side of it as well, if I'm not mistaken, our long-term borrowings are somewhere in that range of around 850 odd crores. What's the pairing of pipeline looking like? How much are we looking to repay from this? Or is this a comfortable number?
So, Hill, this number in the last 2 years has come to half, nearly half. And the way we are going in the next 2 years, it'll be gone. Anant Raj will go back to the original form of being a zero debt company, like it was in 2012.
Right. And what's the timelines that we're looking at?
2 years, sir. 2 years.
Okay.
And the Ashok Estates and the Anant Raj Estates is fully capable of comfortably achieving these numbers.
Right. So if you have to look at the different segments of business right now, what is the revenue contribution looking like? And once data centers is full-fledged, how will that revenue mix change for the company?
See, once data center is full-fledged, let's only talk about 21 megawatts, which is now going to be ready. So per megawatt, you get an income of about 85 to 90 lakhs per megawatt per month. So the revenues, but this is like rental income, So the revenues from this will start to kick in from this year itself, from 1st April itself. And this will keep growing with 3, with 6, and eventually 21. And once we have all this with us, then we'll see how to go, how to increase this number, because then investment is almost per megawatt is about 25 crores, which we have to do. Our land and bidding is already there, so that part is already invested. So going forward, we have the time edge, and plus we have the money edge, because today everybody has to first get the land and a building, which we already have. So with this, we are quite, robust on this part of the business, and we think this can really grow.
Right. And when do you expect the the data center business to actually break even for the company?
Actually, this break-even thing starts very soon in this segment, because like I told you, we spend close to 25 crores. The rest is already invested. And the income per megawatt is about 90. So in a year, you net about close to 10. There are certain expenses also. So this for the company can break even in about 2.5 years.
Right. And from a real estate perspective as well, what's the pipeline going to look like if you have to look at the next 12 to 18 months? One is in terms of unsold inventory. Two is in terms of projects to be delivered.
Projects to be delivered are fully on track. In the next 18 to 2 years, we are fully going to be focused on Ashok Estates and Anant Raj Estates. Whatever contribution we get from the joint venture which we have with the Birlas, as you know, that Anant Raj today has a live joint venture with the Birla Estates, where we have launched a project called Navya Birla, in which we are 50% partners. Whatever contribution comes in from there is additional. Vis-a-vis Ashok Estates and Anant Raj Estates, this in the coming 2 years will completely take care of the debt. Plus, we'll have enough internal accruals to achieve 21 megawatts. So that's how we're taking things forward.
Right. And what's the growth milestone that we have overall as a company, to achieve in terms of 24 and 25?
Like I told you here in the beginning of the interview, last year was 250, then 500, then 1,000. So I can't give future numbers like this, but we are on track to carry on our good run rate.
Right. All right, Amit. Thank you so much for speaking to us and giving us those views. And it looks to be like an interesting time for the company as well. Thank you. Stay safe and speak to you soon.
Thank you. Thank you. Stay safe. Thank you. Bye-bye.